What's up, everyone? All right, so in today's episode, I'm going to break down all of my trades from the morning. Today, I took 4 trades, and I'm green on all 4. So this is really helping my accuracy, but it's not going to help my profit to loss ratio because the average winners were small, about $600 each, which means I'm up 4 times 6, $2,400 on the day. That's a small green day, but you know what? Like I keep saying, this is about survival, just getting through the kind of cold, slow August month. We've really only got 6 days left, so tomorrow and then 5 days next week, and then we're on the other side. So I just want to get through the month of August. It's not going to be, any big record-breaking month, but that's okay. As long as I can keep my head above water and avoid digging myself a hole because I'm being way too aggressive when the market just doesn't call for it, then that'll be good. So this is the stock that I traded today, PTIX. And sure enough, right after I call it quits, it ends up squeezing up a little bit more. That's sometimes typical and a little frustrating, but I'm not going to give into FOMO. I'm not going to trade it here. It's great to see it going higher. And, look, it's good to see. But for me, why did I stop trading it? These topping tails right here, the way it popped up and dropped, popped up and dropped, popped up and dropped. And even again right here, popping up and dropping. This was a tricky stock today. And it's funny because the float is less than 1 million shares. And yet it has 82 million shares of volume and it's only up 144%. It almost kind of is mind-boggling how that could even be possible, because I'll turn on my whiteboard camera here for a second. The way I typically think of it is when you've got a stock that has a lower float, and of course many of the stocks that I trade do have lower floats, when you've got high volume, that's typically when we see the 300, 400, 500% gain. So even yesterday, so let's look at THAR. So THAR has a 4 million share float. All right, so this is THAR. So yesterday, 4 million share float, and it traded on 367 million shares of volume. Okay, so that's a huge amount of volume. And how much did it go up yesterday? So this one went up, let's see, about 429%. Okay, so, well, I guess that's kind of interesting. So in that instance, you've got volume of 367 million. You've got percentage change, which is 400%. We'll just round it a little bit. And then the float was about 4 million shares. Now, I would wager that if the float had been, let's say, 40 million shares, that even with the same amount of volume, it wouldn't have gone up 400%, because the float, the level of supply would have been 10 times higher. So with the same amount of demand, you probably would have seen 1/10 of the move. It might have only been 40%. In fact, it might have even been less, because once people saw that it was a 40 million share float, that big volume wouldn't have come in. That volume came in a large part because people saw how much it was moving and the float was lower in the first place. So then you do this a different way and you say, well, what if this had had a 2 million share float, right? With the same amount of volume, all of a sudden, are you seeing an 800% gain? And logic would tell you yes, because it's the simple equation of solving based on the float. So your volume's the same, your float is half, so the supply level's lower, the demand is the same. Or what if the demand was 800 million shares, right? And a 2 million share float? Well, then all of a sudden, we start getting into some really potentially big numbers. So then on the other hand here today, we've got, what is it? So we've got PTIX. So let's pull up PTIX. Now this one has a float of 400,000 shares. So now we've got the float here. We'll just round it up to 500,000 shares, which is 1/10. So now if this had 367 million shares of volume, I would expect it to have the potential to be going up times 10, right? All of a sudden, not 400%, but more like 4,000%. Okay, so right now it's got 100 million shares of volume. So just about 100 million, it's got 86 million shares of volume. So it's got currently about 1/3 of the volume, but it's got 1/10 of the float. So now you sort of do the math, and this is where I'm kind of puzzled that it's up only 150%. I would have thought it would be up a lot more because of this super low float. I mean, and the fact is, this one stock, THAR yesterday, we're kind of using because it made this big move, and so we're just sort of looking at the statistics of the move. The fact is, there was news behind that move that traders were getting excited about. This stock, PTIX, also has news. The headline is, you can see it right here, doses first patient in phase 1. To be honest, I don't know how significant that is of a headline. So I guess what this tells me is that there are people that are shorting as this is going higher. But with only 500,000 shares total outstanding in the float, how many shares can you really short, right? How much can they really hold it back? That's where I am just sort of puzzled. So if we go back here, PTIX. So we confirm the float by looking at the filings. Now you can see right here, there's a prospectus for a primary offering. This was filed in January. So it was only $1.2 million. So it's a relatively small number of shares that they were selling. All right, so then you go back here. They do have a shelf registration. Now the thing with a shelf registration is that it does give the company the right from time to time to sell shares on the open market. So now, we don't know if they're working with an investment banker, an underwriter that into this move is selling shares. Like right now, in real time, we don't know, punching out 50,000 shares, every few minutes. And next thing you know, they've sold 1 million shares. Because that starts to factor into the equation of, all right, you've got, 100 million shares of volume, rounding up a little bit. With such a low float, how is it not going higher? Well, if the float is being currently increased because the company is selling shares, that would be one way. And another way, of course, would be short selling. And another way would be naked short selling, which would be that, and this is something that I find kind of interesting. So if, let's just say for the sake of argument, that right now I tried to buy 600,000 shares. In theory, that should not be possible because the float is only 441,000 shares. And so I haven't tried this, but I wonder if in fact I'd be able to. And if you were able to, it almost sort of, it sort of exposes this element of the system, the way the market is structured, that allows you to trade in excess of the total number of shares that are actually available on a given day. So could someone be shorting 500,000 shares? Could 10 people be shorting 500,000 shares? I don't know, but you've got 91 million shares of volume, but supposedly, and according to the filings, only a 500,000 share float. And so what that means is essentially every minute, when this has 1 million shares of volume per minute, the entire float is trading hands twice. Typically, that would result in a much faster rate of change. So, like I said, I'm a little bit puzzled. Based on THAR yesterday on a 4 million share float with, this amount of volume, if this has the same amount of volume today, then you would expect a 4,000% move. And right now, you're already at 100 million shares. So it's very possible that it will go up to 300 million. But even if it does, let's just say it does only half. It does 170, 180 million shares. So it does 180 million shares, but it's got that 500,000 share float. Well, it should do 2,000%, right? But it's only up 150 right now. So, and maybe some of this is just the fact that it's August. The market's a little slower, but not really. The only reason that theory would kind of apply would be if there are shorts that are just more aggressive because they're more confident right now because the market's a little bit slower. But it would still require such a heavy amount of selling to keep this down. It doesn't seem that there's enough shares available. And so, let's play this out a little bit further. So it's currently on short sale restriction. Short sale restriction means that you can only short it on an uptick. So that's not totally unusual. I mean, that does happen all the time. And let's just see what the cost to borrow is at Lightspeed. We'll see if I can, if they can get me shares. So the current cost to borrow at Lightspeed right now, they've got 4 different providers. Now I put in for 100 shares, but the cost to borrow is between 1 cent, one cent per share, and 16 cents. Now you wouldn't choose that one, but now if you cancel this and you did it for like 10,000 shares, you might find that some of those providers wouldn't be able to give you that many shares. We'll see. Maybe they can. So you can get shares from 3 of them. Now I can't imagine it would let me put in for like 500,000 shares, right? That shouldn't work. But let's just check. So this should be impossible. Okay. All right. So, okay. Well, so I have a user limit of 500. I don't know. But maybe that's the current cost to borrow. So even 50,000 shares might say no because of the cost to borrow. It's just one of these things that's a little bit puzzling. During the GameStop short squeeze, there was a lot of conversation about, naked short selling. So naked short selling would be the practice. Basically, if you put in to ask for 500,000 shares and then your broker just gives it to you. They're like, here you go, you can have it. And they let you short it. When in reality, the broker didn't actually go get those shares from somebody first. So the whole idea with shorting is that you're selling shares on the open market. So if you sold 500,000 shares on the open market, well, you've got to borrow them from someone who owns them. So, someone who's holding 500K shares, they're holding that position and they allow the broker to lend out the shares. Now they in return get paid, a little bit of like interest essentially for letting their shares be borrowed out, and the broker's in the middle. And so you pay the broker the borrow fee, and some of that the broker keeps as profit for themselves, and some of that they pay to the person they got the shares from. So this is the way short selling is supposed to work. But what brokers have done in the past is they've got this key, I can't remember, it was like F11 or something. They would press this button and it would override the fact that the broker didn't currently have shares available. And what they would do is they would press this button and they would say that we believe we can get the shares ... and then they would just let the trader short it. And if they couldn't, then it would be like, well, it was an honest mistake. But this was a practice, and the reason that the broker was doing it was because why? They were still collecting the borrowing fee. They were making the money on the position. So some of these short brokers are motivated to make money and just kind of, figure that out later, or maybe they don't. And that unfortunately can create the effect that if all of a sudden you've given 10 people 500,000 shares to short, that there's $5 million of selling volume that's in a way artificial. It shouldn't really exist, which is why naked short selling is illegal. But it's been going on every day for years. And, nothing seems, I don't know. I haven't heard of anything happening to stop it. So even after the GameStop saga, I didn't hear of any changes around that. So, I really don't know. I really don't know. But one thing that is interesting is that because this is on short sale restriction, you would not be able to hit the bid. So these big red candles are not shorts that are shorting. That's not created by shorts shorting the stock. It could be created by a investment banker pressing the sell button for 50,000 shares, because they're not shorting, they're selling stock that they own. Now it's shares that they printed, and then they're just basically sending them out to the open market in a direct offering. And that is legal. They are allowed to do that. And when companies have shelf registrations, those shelf registrations are putting all shareholders on notice that the company may, from time to time, sell shares on the open market to raise money, right? And so on a day when the stock is up 140%, that's the type of day a company will, they have a fiduciary obligation to their shareholders to do what's in their best interest. So selling some shares to raise some money when the stock is at a high price would be better than doing like a private placement with an investment banker who's going to say, well, I'll give you $5 million, but you need to give me shares at $2 a share, right? Because then that's not as good. So if they can sell directly on the open market today and raise 5 million, then that's going to be a little bit better between the two options. So anyways, all that is to say, PTIX puzzles me a little bit, how it seems as thickly traded as it is and is grinding as much as it is, despite the float seemingly being so low. So it's kind of a long tangent there. But anyways, the mysteries of the market. And so, if any of you took 200,000 shares or 500,000 shares or have actually tried this, let me know, because I'm very curious. I guess, although I have probably the buying power to do it, I don't have quite the courage to do it, because then if I find out that my theory is wrong, I now own 500,000 shares of the stock, and if it drops 2 points, I'm going to get smoked. So lose $1 million. So I haven't put it to the test, but I just have a feeling that you would be able to just buy like as many shares as you wanted on some of these, especially with a commission-free broker, because they fill internally. They have your orders don't even go out to the market. So anyways, I don't know, just food for thought. But so at the end of the day, I try to trade the price action, and the price action on this, interestingly enough, was, despite what I thought would be very clean, it was fairly choppy. So I didn't break the ice. I took 4 trades on this stock. I took my first trade at a little after 8 a.m. I bought at $3.35. So we'll go back to 8 a.m. here. So this is going to be, so first trade was 8:13, and I got in at $3.35, and I got out at about 3.50. So that must have been just sort of buying this dip here and then taking profit up here. Hit a high of 359, whatever. So came back down, came back up. My next trade was a few minutes later at 8:30, buying for the break of 4. So that was up here, buying for the break of 4. We did get a break of $4, ended up hitting a high of 414. Not bad, but not the most impressive. It was kind of a little bit of a sad trade. Got back in a few minutes later at $4.07, ends up hitting a high of, let's see, right here, about 424. Again, doesn't really pull away, small trade, small winner. Then I took my last trade here after the open, getting in right in this area for the break of 5. It drops, then pops up. So I was in it, I was red, then I got back to green, and I was like, yikes, that was a close call. Then I watched it do a couple more of these topping tail candles, and I said, you know what, I'm just going to leave this alone. I'm calling it a day. So it did obviously go a bit higher without me. I'm a little disappointed that I didn't do better on it, but as I said, this was a tricky one. So, 4 trades, 4 winners, green is good, just kind of trying to chip away at this and, not overstay my welcome, just be kind of managing my risk and a little bit careful. So that's where I'm at right now. We've got 6 days left in the month of August, and I'll be back at it live streaming tomorrow morning at 7 a.m. So for those of you guys who haven't already checked out a 2-week trial, 2 weeks for $20, it's a full 14 days. So whether you start on a Friday or a Monday, it doesn't really matter. You'll get time over the weekend. You can study some of the classes that are available during your trial, and you can sign your market data agreement, so you'll be good to go for Friday morning or for Monday morning, whenever the case happens to be for you. So make sure you check out that trial. I think you'll really enjoy it. You'll get an opportunity to see what it looks like for me to be exercising some big discipline. And as I keep saying, if you can survive during a cold market, that's a really good indicator for how you perform when the market heats back up. So reminder, as always, trading is risky. My results aren't typical. There's no guarantee you'll find success, whether you trade with me or you learn on your own. So please take it slow, manage your risk, and practice in a sim before putting real money on the line. I'll see you guys bright and early tomorrow morning.